Bitcoin, blockchain, ICOs, Ethereum, and all the rest. Are cryptocurrencies the 21st century unicorn, a speculative bubble, or the future of money? The CryptoCast will help you understand the rise, the fall of digital currency, the highs, the highlights, the potential, and the lows, the scams, and pitfalls. I'm your host, Jason Hartman, and we'll talk with some of the biggest names in the space. CryptoCast is your resource for all things crypto. Let's go. Hey, it's my pleasure to welcome Hugh Hendry from St. Bart's, from his resort. Maybe modestly, it's not a resort in total, but he'll tell you more. And he was founding partner and at various times through the years, chief investment officer, CEO, and chief portfolio manager of Eclectica Asset Management. And that ran for 15 years. And it attracted a lot of attention back in 2008, obviously during the Great Recession, when he achieved a 31.2% positive return in the depths of really bad times in the Great Recession. And he has a reputation as a contrarian investor. Lately, he's just been a macro viewer of the economy and the markets. And he's known for his outspoken Twitter bombs and wisdom of many, many years in the macro community. Hugh, welcome. How are you doing?
I've never felt better. As you say, I closed down the Eclectica hedge fund at the end of 2017, and I think I retreated into a dark, gloomy cave. I know everyone's just at various stages of coming out of confinement, but I think I went into confinement at the end of 2017. But this year, I ventured forward, and I'm daring to offer my view on the world. And it feels like the old me. I'm misbehaving. To be curious, you have to misbehave first, I think was one of the wisdoms that I learned earlier in my career.
Sure. Well, hey, any conformist and person who doesn't misbehave a little bit doesn't get any attention, right?
Well, I don't know if it was the naivety of youth. I mean, I certainly recall back in the day, so that would be back in 2002, and my seed investor for the macro hedge fund, the offshore fund, was, would you believe it was the same patron as George Soros and his fund back in, George launched in 1969. And this wonderful sponsor, he was saying, I only have, I think, was it 3 problems? And I thought 3, I mean, I could name 33 off the back, but one of his issues was youth, that I was, at the time, I want to say, I think I was 33, and he was lamenting that he could remember the day that when George Soros began, he was 40. And it was something about the wisdom of investing in a man who had survived the vicissitudes of life, and therefore you felt perhaps more comfortable deploying your capital with a man as opposed to a boy. But here I am now, and who knows what I am.
Well, hey, Jim Rogers, Soros' former partner, has been on the show 4 times now. I just had him on again last week. So, but he doesn't want to talk about Soros at all.
No, Jimmy's a one of a kind. I think in my last podcast, I was recounting an evening spent at a private party overlooking Red Square. And I had Jimmy Rogers, I had Nassim Taleb, I had Mark Faber, the legendary kind of strategist Mark Faber, and a profound deep thinker about a character. And I was bouncing off the 3 of these geniuses of the financial world, and I was saying, Jimmy's just hysterical. He's always great value, but even in downtime, clearly the mystique that surrounds him being your founding partner with George back in the day, everyone wants a piece of Jimmy, and he gives it, and like he has like he would go into his lapel and come out with a sugar sachet and say, I want you to buy sugar. This was back in 2005, 2006, when commodities were really ripping. Another pocket, he would have a silver coin. Another would be a gold coin. Another would be, whatever. That was Jamie. Always on.
That sounds like him. Yeah, he's a great guy. But, we've had Mark Faber on the show, but Nassim Taleb, oh, wow. I mean, just so interesting. I have not interviewed him yet. So It's on the bucket list, definitely. But hey, tell us what you think about where we're going. There's a lot of uncertainty out there, and people are rightfully, I think, very concerned. Take it wherever you want. There's so much going on in the world right now.
Where does one start? People get concerned by the new. They get concerned by the law of big numbers. And since the crisis of 2008, we have seen new practices developed by central banks around the world, and which kind of come under poorly classified, but they're willing to go under this name of quantitative easing or the printing of money, as though the printing of money absolves all financial sin. And since that emerged really very strongly in March 2009, I want to say there has been a very strong bull market in fear. And by that, and I'm very specifically actually using the phraseology of another fantastic commentator in the macro space, Christopher Cole, who's a great expert on options and the mechanics and the construction of option strategies. And up until the virus, you and I and the folks perhaps watching this, we've been kind of had a sense that everything's not quite right. And having seen how quickly things could change in 2007, 2008, we've been very keen to, if you will, protect ourselves. And in the financial markets, people have been doing so by buying put options. And in the process, volatility, which is one of these kind of nebulous, kind of ethereal concepts, but it's one of the founding stones which kind of allows you to create a stock market, a bull market or a bear market. That kind of the living, breathing and exhaling is really volatility. And volatility has been too high, which is to say that people have been willing to pay too much to protect themselves against bad events. The reality is the events of 2008 are they occur maybe once every 100 years, if left unchecked, and if the financial authorities had not pursued the course of action that they did, we could have gone back into the analog of the Great Depression, and of course we did. But there's a fear that the Great Depression is just on our doorstep. So there's been a bull market in fear perhaps not misplaced, but the ability to profit from fear just has not existed because of the kind of the central banks and what they've done, rightly or wrongly. And in doing so, actually, they put me out of business. I was your supplier. If you were scared about the world, like you say, I made 31% in 2008. If we look at that further, I made 50% in the month of October. I made 21% on a Monday taking the kids to school.
Give us some context for that, because, I don't have the numbers off the top of my head, but you were up 31% in 2008. How much was the market down in 2008? I know it was down. I just don't remember the calendar year.
Calendar year? Good question.
That delta really shows how skilled you were, or lucky.
Well, I would disagree with that. So, let's try and answer your question. The calendar year drop for the S&P, I want to say would be maybe high 30s%. In terms of point to point, from high to low, would have been much greater, possibly is like 58%. In terms of determining skill, it is more a function of the course of how we got from point A to point B. And that was the truly most difficult aspect to manage in 2008. You've seen the movie The Big Short. I know most of the participants or the characters who are portrayed in that movie, not necessarily the American managers, but I knew all the salespeople and the products, because we were all we were the small community that could see the future happening in front of our very own eyes. And if you remember, one of those, that wonderful chap from California, he was sitting on the most genius portfolio. He was sitting on nitroglycerin, which was going to blow to the high and make so much money for his clients. And yet he had to gate them. Gate's a technical word, but essentially he had to close the fund to redemptions because the clients wanted their money back. I had the same thing. The month before October, my biggest client, I was very concentrated in terms of clients. I had a client that owned 50% of my capacity, and they wanted all of their money back.
Yeah.
Just on the verge. So the hardest thing is trying to keep people invested.
In other words, they did well and they wanted to take some cards off the table.
No. The event had yet to happen and they were beginning to give up on it.
Oh, got it.
My life is way too full of interesting anecdotes. I had a conversation in New York with these benefactors, these sponsors of my fund, and I was down 3% at that point. I'd been all over the place. I'd been up 25, I'd been down 10, and now I was recovering my losses and I was near flat, but near flat was -3. And I remember them saying, you're down -3, but you don't get these markets. You don't understand these markets. We are going to give all of our money to this guy. This guy, he's down 30, but he gets it. I was just like, what are you talking about? These are amongst the most sophisticated investors in the world. Go figure. The world is a crazy place.
Yeah, it is. Well, at the end of the day, everybody's human, and it doesn't matter who they are. They're all just people, at the end of the day.
Yeah, and the date of your birth doesn't change your genius. If you're born in 1969 or 1769, you've still got the same weaknesses.
Yeah, no question about it. Well, Hugh, everybody's wondering, where are we going from here? I mean, this is like we were talking about. It's a crisis time. I've been doing this presentation I call Pandemic Investing, and I actually got the domain name for that, pandemicinvesting.com. I kind of couldn't believe it.
A smart move.
Yeah, that was kind of amazing. And I think things are going to get pretty tough. It's a lot of businesses are picking up a lot of efficiencies now that they didn't have before. But at the same time, a whole nother set of businesses losing a lot of efficiencies. Businesses that depend on physical space, hotel, restaurant capacity, airlines, where people can't socially distance, and they're going to be forced into lower capacities. And that's going to affect their operational ability dramatically, I think. Movie theaters, Broadway plays, whatever. So what's going to happen? It's hard to make sense of the world nowadays.
You're correct. I am curmudgeonly. Typically I'm a kind of the glass is half empty, not half full. Okay. And it's feeling half empty today. The thing is with the virus, 3 months ago, we had no data. And therefore, it was legitimate to be very fearful and to go the extra yard to try and protect our communities and to try and manage the pressure that it seemed was likely to be felt by our medical infrastructure. Today, and I say this as I'm a figures guy. I've spent the last 30 years analyzing stuff. And we have so much data. And with the data, it is very hard to reasonably justify this willful destruction of enterprise across the world. Now, it's easy for me to say that, kind of cozying up in my kind of billionaire's island in St. Bart's.
Sure.
The figures speak to another story. And so half of me feels like today is a narrative from an Ayn Rand book. Has Atlas just shrugged? Where is John Galt?
John Galt is in his valley.
Yeah, and if you will, I'm in my island. I'm like, you know what? Have it, take it. And conspiratorial theories, I think, are for the fairies. But I can't understand. It feels like a coup d'etat by the state. We're now all working, and we're now all in the fate and the hands of the government. Remember that was the most scary thing you could say. We're from the government. We're here to
help.
To what?
Right. Yeah.
To help. Really?
Yeah.
I think you got the wrong house. Like, I think you want to be next door.
Right. The famous last words. Reagan used that line a lot. I'm here from the government. I'm here to help. But and certainly everybody around the world they've been forced to become a lot more dependent on government. And the next stage of this is going to be even more scary. And I'm not talking about the economic impact. I'm talking about contact tracing, the surveillance society, the Orwellian 1984. of this, we ain't seen nothing yet. We thought it was bad after 9/11. It's just going to mushroom after this.
I fear that's correct. So, but I think it's very potent that, I was using that very powerful slogan from Reagan from 1980. It's 40 years ago.
Yeah.
And I think we're at the end of a 50-year cycle. So I think the origins of the 50-year cycle began with the US breaking away from Bretton Woods and from the gold standard up until, I want to say, August 1971. Any US citizen or, anyone holding a dollar bill could exchange it for its equivalent in gold ounces. And that was exposed as a lie by the overseas central banking community, notably the French. That 50-year cycle. So by the mid-1970s, the end of the previous 50, I want to say we had a cycle which ran from 1930 to mid-1970s. So again, it's either 40 or 50 years, but it then merges with the cycle, which is just concluding now. And at the end of these cycles, chaos reigns. And we've had 40 years of order, not chaos. But if this was 1974, chaos would very much be the accepted belief system. What is chaos? Chaos would be the OPEC cartel pushing the oil price from nothing to $12 and having traffic round the block to get gasoline, yeah? Chaos would be the Vietnam War, and it would be the failure. Chaos would be the hippie revolution. Chaos would be breaking down, thankfully, the liberation of, the crazy racist legislation. There's so much. Chaos would be the central bank, the Federal Reserve, having a kind of an income cap on how much you could earn. Chaos would be the government telling you how many dollars you could take out of the country. Chaos was everywhere. And we elected Reagan and Thatcher, and we were praying for order. Mm-hmm. And we got people like Paul Volcker, the chairman of the Federal Reserve. And Paul was spiritually and physically a giant of a man.
Sure.
Think of a central bank that raises interest rates in a recession.
He forced a recession. Of course, Volcker just passed away, but his proponents would say that he was willing to make the country take the tough medicine and break the back of inflation. But others would say not so much. I mean, what do you think? What is your Volcker stance? I'm curious.
All of these characters, they are a combination of making it happen and being in the right place at the right time, okay? A Paul Volcker today would not be the right time. So why was Paul Volcker the right man at the right time when he became Fed chairman? I want to say 1977. He became Fed chairman and he was potent and powerful because we were at the end of the previous cycle. We deleveraged after, the US banking system was bankrupt in 1932. Mm-hmm. And we purged the economy of its debt. And we had a global war in between, which slowed that process down. But we typically we went from total debt of 3 times the American economy. And by 1973, 74, that debt figure was 1 times. We deleveraged.
Right.
When you deleverage, when debt is small versus income, you can employ a sheriff like Paul Volcker, and he can raise interest rates. He raised them by 200 basis points, 2 percentage points on a Saturday morning. You can do that. You can purge the system of its rottenness. I was kind of saying the Fed and a Volcker Fed, the mission then is to be kind of like Tony Soprano. You pimp the economy. Nothing pimps you, excuse my kind of colorful language. Today, a Paul Volcker would be a catastrophe, or that strategy, because there's too much debt.
Is Jerome Powell doing the right thing today? The balance sheet is insane. I don't think any of us, we thought it was crazy during the Great Recession, but now this is outlandish what the Fed is doing. And Powell is so bold about it. He makes no bones about it. Buzz Lightyear is his hero. To infinity and beyond. Greenspan would be talking in code and you'd have to decipher him. But Powell is just...
No, I think you're very unfair. I think Powell is exactly... I take issue with almost everything you said about Powell.
I'm not saying he's a bad guy or anything. I'm just saying he is what he is.
You are taking issue with the policies that he is trying to explain to the American public. And of course, he's explaining and trying to say that they are worthwhile, or they're like a medicine which is necessary. So the actions of the Federal Reserve, the fear is that they are printing money, and that eventually, if you print enough dollars, then the price of finite things like property, like so prime real estate, yeah, the things that are, so like St. Bart's is prime real estate. This is I want to say 23 kilometer wide. The circumference, I think, is 23 kilometers, which is to say it's tiny. The building code makes it harder and harder to construct on the island. Mm-hmm. And so the stock of new housing is not expanding. Okay, so that's a finite supply. And so the argument is the more and more and more billions, and now we talk about trillions of dollars that you produce, then you're going to push prices higher for these finite assets. That's the argument in favor of gold. And that's why gold is beginning to resuscitate and rejuvenate itself, and prices look as if they're set to go higher. What is the Fed doing wrong? I would say the Fed is pretty much at the limits of what it can do. I think the Fed gets a bad rap. I think that it's not printing money. The financial markets are watched like hawks by very, very smart and aggressive bond traders. They're pricing 10-year securities today at almost a zero yield. The problem with the Fed is credibility, that no one believes that they have the wherewithal to generate inflation. Mm-hmm. So I don't really take issue with what the crisis. We saw about a 35% peak to trough, very rapid decline in the price of risk assets in the month of March.
Sure.
And were it not for the intervention of the Fed, that probably could have been a 50 or 60% correction.
And I'm not necessarily being critical. I'm just saying that it's amazing. I mean, the action has been overwhelming. It's really...
Well, but it hasn't. So I'm not trying to kind of say the opposite each time to you, but...
You said push your hot button, so here we are.
No, indeed, because, I know sometimes I have a tendency to be a little bit too full of myself, but the remarkable aspect of what's happening with the American Central Bank, Jay's trying to he's trying to say, hey, look, I'm Fed chairman, but call me Jay. I'm just a regular guy.
Right.
He's now embarked on a radical PR campaign. Mm-hmm. Okay, and he's been advised to do so because of his credibility problem. The thing is, when they, if you will, printed money, which is a nebulous concept.
Yeah.
But they kind of print it to the equivalent of almost annualized. If they continue printing or intervening in the manner they did in 1 week in March, you'd be talking about something like $60 trillion of dollar creation. Mm-hmm. To put that in context, that would be like 3 times the size of the US economy. That's enormous. And yet the bond market went, nah, big deal. What did you do? You didn't do anything. If anything, you didn't do enough. If anything, interest rates are going to go negative. So on one hand, you're sitting there going, wow, I can't believe, I read in the newspaper, the Fed's just lost his bearings and we're printing all of this money. And, this must be the advent of higher prices. We're going to get inflation. I'm going to be in my car and I'm going to have to queue around the block and oil's going to be $100. On the other hand, the smartest, I know there's emotional intelligence, but
the bond people,
who know more about pricing bonds than anyone in the world, they're sitting there going,
not worried.
So, it's kind of hard to be J. Powell today. Everyone thinks you're a moron. I had that problem. Don't be a moron, be an oxymoron. And that's the Fed today. Fed's an oxymoron.
Give us some predictions. Gold, Bitcoin, the dollar, asset prices, consumer prices.
Okay, so predictions are for the birds, okay? Until they invent a time machine. I mean, and we'll have to get Elon Musk on. Once he has conquered Mars, we must reroute his intelligence to designing a time machine. They don't exist currently. So I have not been to the future. And predictions, I just tire people. Predictions are for morons, and I'm an oxymoron, as I stated earlier. But what can I say? I feel as though I'm guessing the majority of your listeners are based in America or kind of have an affinity to calling themselves American.
Majority. I mean, we have listeners in 189 countries. So
Okay.
I'm waiting, Hugh, I'm waiting to get North Korea and Cuba online, but oh well.
Well, they're probably using a proxy server with their VPN, and they're probably listening right now.
Yeah.
So I want to say that I feel as though actually America has been taken hostage, and that if you're a US citizen, you are a serf, you're almost like a slave to external forces. The external forces being other economies. I want to say China has kind of won, that China has pimped America. And secondly, financial speculators have pimped America.
Yeah,
which
well,
is to say that
financial speculators for sure. No question about that. China, I don't know. So you're bullish on China then, huh?
Didn't say that.
Okay.
Didn't say that. I said that the US, by its own admission, it had an ambition to have the dollar serve as the reserve currency, answerable to no one.
Mm-hmm.
The currency of commerce is the US dollar. And through a whole series of crises in Southeast Asia in the late 1990s, they really reinforced the point. If you're going to run the Thai economy or the Malaysian economy, or indeed the Chinese economy, it's run effectively on US dollars.
That's amazing. I know.
And for them to grow, prosperity creates a desire for more and more dollars.
Mm-hmm.
And it's the Federal Reserve that has to produce those dollars.
Right.
And when there's a crisis that emanates, a crisis that begins like a hurricane that begins offshore to the United States, it's the US that has to react. It's the US that has to print those $60 trillion of annualized dollar bill issuance in 1 week in March because of a crisis that began in Wuhan and not in Detroit, if you will, okay? So partly you get what you want. And so the US policymakers have allowed, at each step along the road, the twisted road of history, decisions have got tougher and tougher and tougher. Now, back in the late 1920s, policymakers were zealots, okay? And so you've got a choice. Okay, your choice is this. You can have policymakers like we had in 1930 at the US Federal Reserve, and kind of like Paul Volcker at the Federal Reserve in the late 1970s. And they have an ideology which is hard money.
Yeah.
The dollar has to be strong, and it has to protect the purchasing power of the US citizenship.
Right.
At all costs. And if we use the language kind of which was there around the US elections in the 1890s, effectively those policymakers were willing to sacrifice the US household and to crucify it on a cross of gold on the ideology of hard money.
Yeah, okay. I agree. That goes too far. It's impractical nowadays.
And at its peak, you had Andrew Mellon, the Treasury Secretary for the US in 1930, and his famous thing, let's raise interest rates and purge the system of its rottenness. Let's clean the stables.
Yep.
And what happened? You had 20% unemployment.
Yep.
You had a generation deeply psychologically scarred by the human tragedy. Okay.
Multiple generations, actually. But
yeah, indeed. So, or you can have today. And really today it kind of began in a cloud with Greenspan. Like you said, he was a smoke and mirrors guy. He didn't reveal himself. There was a lack of democratic check on him because he refused to reveal what he was doing. Bernanke really is the architect and really the person who marks the beginning of the polar opposite. And there's nothing in between. Mm-hmm. And the polar opposite is Bernanke, I want to say, at the bottom of the bear market after the TMT crash. But Bernanke put his hands up and he said, I am here on behalf of the Federal Reserve to apologize to the US household. I'm here to apologize to your grandparents, to your families that were made to suffer for generations because my predecessors pursued a hard money doctrine at the expense of everything.
Yeah, and he was a big student of the Depression too. That was his thing.
Absolutely. And he said it happened owing to an ideology. It wasn't necessary. So here we are now, and we're in another world. And you can defer and defer and defer the notion of a Great Depression and that human tragedy. And that's what the Federal Reserve are doing. And they're getting a bad rap for it.
Yeah. And they're getting a bad rap from, is that sort of from the Peter Schiff type camp of the hard money, the Ron Paul Peter Schiff type of camp?
Well, it is, and a huge contingent of the financial base. Those owning Bitcoin and gold shares are very much all there. I'm not like passing judgment. Mm-hmm. I'm simply saying that this is ideology, and it's like this kind of strategic game. And what people forget is that it's not checkers on a board; it's real people.
Yeah.
Okay. And the proponents or the fiercest critics of the Federal Reserve can't really offer a solution. They can't offer an alternative. Or if I'm to put words in their mouth, because they don't really offer the alternative, but if you're to purge the system of the rottenness, that means enormous bankruptcy. And again, it means the redux of the 1930s. That's what it means.
Right. And the thing about it is all of those sort of the hard money crowd, they've been saying that stuff since, probably forever, but Howard Ruff, if you know that name from back in the 70s, I remember, and through the 80s, 90s, 2000s, and he was on my show, and they're just always wrong. These guys are just always wrong. They make like really interesting arguments. I love listening to them, but it just seems like we are actually in a new world. And when you have the reserve currency, when you have the biggest military, you can kind of defy the laws of math and physics, at least for a long time.
I am not here to cast judgment on who is right and who is wrong. And I think actually that when people form opinions, and people are entitled to their opinions. I'm not expressing an opinion in terms of the veracity or smartness of anyone else's argument. I have my own problems. But what I want to say is that we make geniuses of people mostly owing to circumstance and the time in the cycle. And these cycles they run as long as an adult life, which is to say 40 or 50 years. We spend 20, 25 years being kids and being just stupid, right? And then we spend 40 to 50 years kind of trying to wisen up. Mm-hmm. And so that's like one of the outer planets going round. I think I said this before and someone corrected me. Is it Saturn or something? If it takes us 1 year to go around the sun, some planets, say it took you 200 years, you might never see snow. If you saw snow, mm-hmm. you'd be like, oh my God, what is this stuff? So we're conditioned by the very slow passage of time. The thoughts with regard to hard money, and you name some people like Peter Schiff, they're kind of relevant today in the sense that gold has got a pulse. Gold's been trending. Gold changed its behavior in the year 2002, 2003. It exited a bear market, and it kind of has heralded and told you that the Federal Reserve was changing from this hard money ideology to we will go to all lengths to save the American household. Mm-hmm. There will be consequences. The consequences are being felt at the political economy level, where again, when you feel you're being taken hostage by the overseas sector, then the great fear is that we get closer and closer to conflict. Just now, the conflict seems to be of a trade nature, but God forbid that would carry over into military conflict. But that becomes a potent risk at times like this. This is one of the unpleasant side effects of the Federal Reserve's policy. The other one is, again, when you're being pimped by the financial community, then again, it's the 1% get to own the economy. That is fermenting political revolution. You have Donald Trump today. We have Brexit in Europe. We probably have the inevitable breakdown and failure of the European project because of the Federal Reserve and other central banks' ideology of avoiding all crisis. Again, I think you should try and avoid all crises, but let's understand the pitfalls are really, really hard.
And one of those pitfalls, it sounds like you're saying, is concentration of wealth. Because, what seems to happen, and it's so hard to work out, I mean, you know more about it than I do for sure, but is that whenever you have all of these stimulus plans, just the people that are just kind of closest to the money, the people that are in that system, they get most of it. And, the little guy gets a couple of shekels, and that's about it.
Well, there's that. And it's just not free enterprise. I struggle and I hesitate because this is a global pandemic, where the statistics kind of say that really, I know it's not influenza, but, we have developed a mindset where just one life is worth sacrificing the US or the global economy. And we're kind of the wrong way round. And so our thinking, what I'm struggling to say is that 50 years ago, we were on the transition point from chaos into order. And the hardest thing about our life today, 50 years later, is that we're at another pivot point. But sadly, we are pivoting from order. The accepted belief system of today is one of order.
Right.
And we are pivoting into a world of chaos. That's the challenge.
Okay, so before you go, just enlighten us a little more as to what that chaos looks like, if you can. I know we got to wrap up here, but
let's answer that in the inverse. What was chaos? Or let me say, what did we do to reimpose order? We gave central banks independence, and we said, hey, look, bring on a recession. We asked central banks to control and to constrain the creation of dollars. That's just two examples of what we did. Another example would be we liberated the world. We used the great poster of the American dream and we projected that onto this blank canvas of the rest of the world and said, look how wonderful this is. Mm-hmm. And in doing so, we brought down the Berlin Wall and we liberated literally billions of people from tyranny into a world more recognizable as our world, okay? And then let's think of where we're heading. We're heading into a world where the central bank is less and less independent. The central bank works for the man, it works for the chief of state.
Right.
We're looking at a world where the central bank is not trying to reduce inflation, it's trying to increase inflation. We live in a world where rather than reducing the money supply, they are desperate to increase the money supply. And we're living in a world where that whole liberation from tyranny is being rolled back. And this awful virus thing is perhaps going to make us less of a connected world and more of a disconnected world. Yeah. And so that's what I call the early signs of the chaos which awaits us. And that chaos with this burden of time which is now weighing upon us. A flight path, like a chaotic world that I could see, is that, like the boy that put his finger in the dam, the Fed put their finger in the dam in March, and they stopped the cascade. They stopped the prices from falling. But the pressure's, I think, going to mount and mount because, it's so bad for commerce. I mean, here I am in St. Bart's. Do I go forward and invest in I've got to make a decision in the next 2 weeks whether to go forward with a $4 million construction project. And I don't know if there's going to be any airline to bring my American clients from New York to St. Bart's.
It's a fair question, yeah.
So, and if I don't spend that $4 million, I'm just one guy.
Right.
One kind of rich guy, but I'm just one guy. Yeah, I think what you could see. Let me. I'm not saying this is going to happen, but this is the chaotic world. Uh-huh. The Fed and its finger, the pressure against it.
It's going to get
the water
out.
pushes it back. The S&P, which has rallied to where's the S&P today? Like 2750, let's say. The S&P, I think, could plunge again, mm-hmm. and then to 2000 or less than 2000.
2955.
2950. There you go. I was underestimated. 2950, and the high was 3250. So we've almost gone back to the high.
But you got the biggest investor in the world, buying up assets, the Federal Reserve.
The biggest investor in the world is when you and I become fearful. There isn't a central bank that can hold us back because you and I and our resources and our access to leverage And when we have fear, nothing can take us on. Okay, this is all just a game of confidence.
Yep.
So anyway, I can see the world. I could see financial markets getting slammed and falling again, and then the Federal Reserve and the U.S. government come in with another package, and then everyone gets loans from the government, and then they say, you don't have to pay us, and then we start really printing money, and then everyone goes, holy cow, I can't own 10-year treasuries at zero, and interest rates start moving, and oh la la. So I can see a world, the chaotic world that I could see would entail the S&P trading at 5,000 or 6,000 in the next 5 years, 10,000 in the next 7 or 8 years. And that would not be pretty. That would be a tragedy.
Yeah, wow. That's something, yeah. Who knows? Wow.
I don't know. For sure, I don't know, okay? But my franchise for the last 30 years was, life is capricious. There's always like weird things happening, not just in the financial markets, in day-to-day life. You always hear that expression, who would have thought that could happen? Who would have thought? Well, kind of my own little world, I'd be like, I kind of thought that in 2008. I kind of thought the gold actually could embark on like 3 decades of a dramatic bull market back in 2002. Back in 2012, I said, my role is no longer to be this moral curmudgeon commentator on the moral philosophy of the US central bank.
Right.
So my role is just to be contentious. I am not claiming any ability to see the future, but I would counsel your audience, and I'd ask them just one thing in terms of preparation. Think of the most chaotic events and begin to think of them becoming normalized, and then try and think how you could profit from chaos as opposed to order. And that's going to be very difficult because for 50 years, we have trained our minds to think orderly.
Yeah.
And now and that's why, look at me, like people want to hear me, look at me. Do I look like do I look like Jimmy Rogers?
No, you don't.
No,
where's your bow tie?
This is the face of the future. This is chaos, my friends.
Right.
You heard it here first.
Yeah, that's pretty good.
Send me that 20 seconds.
Yeah, that's a good clip right there. I love it. That's perfect for your Twitter feed. Just, this is chaos. I love it. So the last chaos decade was the 60s or into the mid-70s?
I think chaos it's the transition between 40 and 50 year cycles. So I'm saying that we had a cycle of excess, a cycle of exuberance, which facilitated and enabled the US economy to leverage up. And typically the ratio is up to about debt 3 times incomes, yeah? And that concluded spectacularly with the crash.
Right.
The crash was made 10x worse by the ideology of the Federal Reserve. I then say to you, we spent 40 years deleveraging. At the bottom of a deleveraging cycle, everything is cheap. So here I am, the Caribbean, as you know, Richard Branson, the Virgin entrepreneur, he buys an island.
Yeah, I've been there twice.
The seller wants $1 million, but at the bottom of a deleveraging cycle, he says, I'll give you 100,000. And the guy says, thank you very much.
I think Necker Island, he paid $177,000 for.
107, but he wanted $1 million and they agreed on 177.
Yeah.
That's what happens at the bottom of the cycle, okay? Then you get the chaos. The chaos is the UK goes bust. It has to call in the IMF. The chaos is the Latin American crisis. The chaos is the petrodollar currency crisis. It's queuing for oil. The chaos is inflation. The chaos is the debacle of the American hostages, where suddenly you think, we used to be America. We used to be great.
Right.
What happened? Yeah, that's the chaos, right? Then you say, well, give me change. Let's kick these morons out. Let's kick Carter, right? Let's bring in Reagan. Let's bring in Volcker. Give me order, right? That's 79-80.
Yeah.
But today it's 2020, right? And today it's like, I'm so rich that I don't punish me with higher interest rates. So you know what? We're going to punish you with chaos. Buckle up. The ride is going to be torturous.
Interesting. Don't punish me with higher interest rates. So the pressure to leave these negative interest rates or, real negative interest rates, so you probably agree, out there. It's a funny time, Hugh. It really is.
Well, it's the Chinese curse. May you live in interesting times.
That's a
we
good
may
way to wrap it up.
may be imposing, or you may be imposing trade restrictions on their products entering their states, but they have imposed interesting times on you. So
no question.
be careful.
Yeah. And that quote used to circulate a lot around in 2008. May you live in interesting times. And here it's back again. So you have some good stuff out there on Twitter, etc. Share a link or wherever you want people to find you.
I am defying convention because I know financial folk don't like Instagram. I don't wear a bikini. I may have to, depends how desperate I become.
Are you a social influencer? I think a lot of those guys went out of business on Instagram.
Well, like I say, I am going to reap chaos on everyone. I want people I'm training people to think chaotically. My passion is my Instagram account, which is Hugh Hendry Official. Mm-hmm. But really my followers, my tribe, if you will, are to be found on Twitter. Yeah. And it would be the inverse of my names. It would be @Hendry_Hugh. And you will find me there. Soon to come is my YouTube, but my YouTube page is not finished yet.
Yeah, good stuff. But folks, think about how chaotic what he just said is. How many hedge fund managers do you find on Instagram? That's for 20-something girls in bikinis, and social influencers, right? So yeah, very interesting. Hugh, thanks so much for joining us today. It's really been fun talking to you.
No, thank you. Always a pleasure.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.